Okay, good morning, everyone. Thank you so much for joining us today for our next discussion in digital assets conversations from the Edge series. Just as a reminder, this series gives us a chance to gain insight and perspective from those organizations that are driving innovation, driving scale, production, implementations of digital solutions, and to gain expertise from those who have gone through and are going through the hard work to transform core areas of the financial markets. Broadridge is one of these key market leaders, driving significant change in how market participants borrow and lend securities via repurchase agreements. And with us today is Paul Chiappetta, who leads the product management and business development activities at Broadridge, is well known to many of us at DA and many in the industry. And he's going to share his perspective on digital securities financing. And thanks, Paul, for being here and doing this. So let's start off with a series of questions. Paul, if you could, Broadridge's distributed ledger repo, or DLR, business has made some considerable impact in creating digital capital markets activities and drawn the attention of many market participants across the globe, buy side, sell side. But not everyone who might be listening in today may be fully aware. Can you just first start us with an overview of DLR?
Yeah, sure. So I think our distributed ledger repo platform is fairly simple. It's built on demo language on the Canton network, and it's based on smart contract methodology. So from that perspective, it's kind of a workflow tool, and we roll it out to a number of different processes. We kind of look at it in two categories. The first would be kind of workflow efficiencies driven by DLR. So that would be a lot of your post-trade processes that we're just able to improve by inserting this technology. And then the other category would be kind of into the bilateral financing space, where we're starting with things like intraday repo, and we can layer on some other use cases as we move down the road. But I think in putting it together that way, we're able to start very simply and provide some of our clients with immediate benefits as we get in and further develop more beneficial and more complex use cases as we go down the road with them.
That's fantastic. Thank you. If I could just pull on that last point a little bit, because DLR has gained, quite frankly, quite positive attention for its benefit to the collateral providers, particularly in terms of capital savings, reduced daylight overdrafts. I think when you start these types of projects, everyone sort of focuses on the operating benefits, which are obvious in your solution. But can you talk a bit more about the capital benefits? What does that mean? What types of capital savings are we talking about? Now, how is it achieved with DLR?
Yeah, I think a couple of ways. I think where we start, I said very simply, we're looking at things like transactional savings and daylight overdraft and intraday liquidity management and things like that. And very often there's a cost for those things. So there's usually an upfront cost, which would be in the form of daylight overdraft, but there's also an additional cost where you're taking into account into your liquidity buffers and other reserves where you're holding capital against that. So if you can bring those balances down and be more efficient, then the calculations that go into your capital holdings will also go down. The sizing of your liquidity buffers will reduce. And from that perspective, it can be a pretty significant capital savings.
Yeah, and it's interesting too, because I think that so often in the repo market, it's sort of that the demand is going to be driven by the assets or the types of assets or cash that can be lent. But really the backbone of it is needing to have those that are managing their balance sheets finance those balance sheets. So that makes a ton of sense, and certainly the capital impact has been quite considerable. But what about the benefits for the cash provider, for the others? I mean, this is why repo is such a perfect use case for this, because it really is two sides.
It is. And particularly in repo, there's so many different sources and uses of why you would do a repo trade. And we're looking at our early use cases are probably zeroing more on kind of liquidity usage, right? So where are you trying to bring in short-term liquidity through an intraday repo? And you're right, on the other side to that, in many cases, the liquidity provider has an additional benefit of being able to find different opportunities to deploy cash, right? So maybe you've got cash intraday for a period of time. Even as a dealer, you may have cash intraday.
Right.
Even if you're managed, assuming perfect settlement, you may have extra cash intraday, and you can put that to work. So you can really, manage your capital more effectively that way. it's another tool in your funding toolbox, if you will.
When you originally started, you sort of alluded to it a moment ago. When you originally started the creation of the DLR product, you sort of went for an area of the market, intraday, that hadn't previously had really any practical solutions, and yet was probably one of the biggest things that people were demanding for, but asking to have in the market as a type of transaction. So you've done that, and that's actually proven to be quite successful. That's what we were just talking about. But you're now, maybe you could talk a little bit about what is meant by intraday as well, but you're also now going beyond intraday. We read recently about the launch of sponsored repo and some other enhancements that you're making. Could you walk through those?
Yeah, so and that's what I touched on initially. Like, we kind of look at it in two categories. One would be workflow efficiencies, and I think sponsored repo is a perfect example. It's a great program offered by FICC, allowing some of its members to sponsor buy-side firms that may not have the right collateral profile or right profile to be a FIC member. And it allows firms to offer directional repo. It's balance sheet friendly for them. It provides additional liquidity to the client. But what we offer allows a dealer to do that a little bit more efficiently. It allows them to manage their settlements more efficiently, and it allows them to manage their fails and reduce fails. So from that perspective, it reduces their costs, and it allows them to achieve greater liquidity through the reduction of fails. And that's where the DLT is sort of driving part of that process, but it's sort of inserting that into an existing workflow. So you've got sponsored repo that you've seen a few recent announcements. We're getting a lot of adoption, and you'll see a few more announcements of additional clients coming on board. And frankly, that's really the way we offer impact now. The solution that we offer going forward for sponsored repo includes this tool, and it makes it significantly more efficient overall. But there's also some other ones we look at. There's some other use cases that have that technology embedded similarly. We're looking at pair-off intercompany across entities, and some other affirmation solutions that we'll talk about more as we start to release those use cases. So it's this technology just allows us to do a lot of the things we do today so much more quickly and efficiently. I keep saying the word efficient, but it really just, the smart contract methodology and the way it allows us to do things just allows us to replace some of our legacy tools in existing processes in ways that are just much better and just make the process so much smoother.
Yeah, part of the reason I'm smiling is for my own personal professional background is having been in the markets for years and years. And, I think decades could go by before there was much change in how purchase agreements were processed prior to this. So it's kind of nice to see that now this is the market that previously never was touched before in terms of any form of transition or change, to be the area that's kind of generating the most interest and most activity. But really just does come down to having a better process for something that is, as I said at the beginning, core and critical to financial services. So we also happen to be in a market right now where interest rates are going up, which does gives much more room for there to be repo activity and repo transactions done, because there's actual return and interest that can be made on them. So as those opportunities for return on cash or securities increases, the volume tends to increase. Can you talk us through some of the aspects of DLR that will be able to handle that scale and support that growth of the market, the redesign of the workflow that you're doing?
Yeah, absolutely. I think if you look at scale, some of the intercompany workflows that we have today are just massive volume. So the scale of the system, it's not a problem in terms of volume or flow. Where we look at our initial use cases were workflow efficiencies. As I said, it's kind of a workflow tool, and we look at how we can apply it to a number of different parts of the repo process or outside of repo, really. But our initial use cases look at intraday, right? So this is intraday repo is not a new concept. Repo by the minute.
It's been around forever. It's just that no one's really solved it before now.
It's tricky from an operational risk perspective, right?
Yeah.
Like, to do such a compressed settlement cycle, to be able to manage it in a short window. I think that's where the benefit of DLR really comes in. You have that work, that interlife, even though it's a short interlife, you're still agreeing on the fee and seeing it in real time, and being able to manage through an orchestration layer that DLR provides between the liquidity and the collateral providers, and how we manage both the movement of cash and the return of collateral in that period of time. We remove most of the operational risk. We eliminate the fail, and we make sure that the timing, it's is precise around when both the on-leg and the off-leg settle. And I think that's key to really unlocking that market. And when we look at where interest rates are and the downward pressure on costs, I think the last time we were in this sort of environment, this kind of technology didn't exist. So
that's true.
To be able to layer that into that sort of workflow just makes it achievable at scale, and that's the key. But on from the intraday repo, you can extend this with the immobilization of collateral into settling repos off, no longer beholden to the settlement window. You can settle repos 24/7, or at any time you can execute the trade. You can move cash and transfer ownership of the collateral without having to move assets around the depository structure. So it really just frees you to do so many different things. And I think the environment we're in is really dictating some interesting use cases and applications of the process overall.
Yeah, I mean, it really is the right word when you keep saying efficiency, because there is no better term for it. It is, this is a market that has historically been so core and so central to the way the infrastructure works, and organizations can perform their activities by being well funded, but yet it was one that was on one of the most brittle types of infrastructure. So the chance to have it be more transparent, more efficient in 24 hours, you say, is monumental. But like every good monumental thing, it does mean it's going to attract the attention of regulators. Now, this is admittedly a market that has no shortage of regulatory attention and requirements around the globe. Can you talk a little bit about how you're factoring that in?
Yeah, so obviously we have relationships with the regulators, and they understand what we're doing, and they've asked, and we've had in-depth conversations around how our process works front to back. Also, some of our clients that have gone live had interaction with regulators where, we've helped answer the questions, or we've understood what they're talking about, and we see very consistent questions. And often those questions are misinterpreting a blockchain-based solution on distributed ledger as crypto, and a lot of the questions are coming out about areas that we've really got nothing to do with at this stage. I think what's really key is the way we've applied this technology with the existing infrastructure, and everything we do is under standard security law. I think that's really important, right? All the provisions around default and so forth are standard in a GMR or an MRA. How we move the assets are dictated by the custodial undertaking agreement with the liquidity provider. So all of it is really under standard securities law, but it's often, just getting that understanding and providing the clarity back to the regulators. But that's really the key is very simply this technology with the existing operating infrastructure.
Yeah, I mean, I can imagine that gives a great degree of confidence. It's a very familiar set of legal terms. You're not modifying that. Correct. Somebody could even argue that you're giving the regulators the opportunity to become more informed as the markets unfolded during the day rather than after the fact, which is, I think, a pretty big additional benefit that probably doesn't get as much attention as it should for what you guys have done.
Absolutely right.
Yeah. A couple more questions. One that might sound just a little bit odd, but I just want to ask it in the context of, so much of what we see in the market for technology, and thank you for mentioning what you're using, but the market for these technologies in smart contracts and DLT are POCs or pilots, and they sort of stop at that stage. And I just kind of want to say to everybody who's listening, and give credit to you guys, like building these solutions is hard. I mean, it's worthwhile, it's transformational, it's generating incredible opportunity and return for those that do it. But building real solutions is hard. So what can you just tell us, like, what keeps Broadridge going? What makes you get up and still invest in this every day when it's been a bit of a mountain to climb? I mean, you're coming on the other side of it now, so it's probably easier. But what has kept you all engaged and focused for so long?
Well, there's a lot more mountain to climb, that's for sure. I think where we've been successful is in starting very simply, right? So the initial use case, as I said, it's this technology inserted into existing processes where we just think we can gain, help clients do things better and more efficiently by inserting this into things like sponsored repo and some pair-off processes. When we start to look at, the market around intraday repo, again, it's very simple. This isn't a tokenized asset or a digital asset. It's really, a representation of a asset on the ledger with the assets held in a depository structure that our regulators know and understand. And I think that helps. So as regulations change and technology, the rest of the ecosystem is able to keep up, we'll continue to evolve and push further. But I think right now it's just starting simply with existing infrastructure, this technology. At the same time, we stay involved in some other things, and we're constantly having discussions about, native issuance and financing them on our platform, different things, and staying in those some of those discussions that may require a little bit more give from the regulators and a little bit more exchange in the overall ecosystem. But I think where we've been successful is just starting very simple, and what can we do today with within the existing regulatory regime.
Yeah, I think that what's also been beneficial, and frankly, it probably leads into my last question. We have focused on digital securities financing today because of the tremendous amount of effort and success that is now being posted as a result of it, and the network that you're actually building of liquidity and clients and different types of transactions coming into it. But in particular, your role, as I said at the beginning, is not just simply tied to this one product, but more broadly. So could you, just as a last comment, give us a view into the DLR strategy, but maybe also more broadly how Broadridge is thinking about growing in this digital space and what market participants can expect?
Yeah, so I think we've been pretty frank about where we started. It's that sort of workflow efficiency, and now we're looking into the bilateral repo space, and those are both very, very simple, and expanding them both onto a global footprint and looking at what we've done in the U.S. and how that translates globally. Recently, we had a roundtable in London where we looked at intraday liquidity in UK and Europe, and how can we extend this use case further. But I think further than just what we're doing now onto a global footprint, the third sort of lane we don't talk a lot about is what else we're looking at from a research and development perspective. And that gets into tokenized assets and funding of tokenized assets, and tokenized cash in different currencies, and various relationships we have with some partners in the same space, and how we look at interoperability. I think it's in where we're looking at global networks that are trying to achieve the same thing. I think there won't be one solution for a long time, so it's important that while we develop our network, we're part of the larger global ecosystem of platforms and participants, and making sure that we're staying involved there. So I think it's ever evolving from a Broadridge perspective. As some of those things, it's hard to say which basket you'll go into next. As things develop and opportunities emerge, we'll make sure that we're involved in the right place so that we can participate in whatever the next wave is. But I think for DLR on its own, I think we'll continue to expand what we're doing today, just more broadly.
Great. Well, thank you. Well, listen, thank you, Paul. It's been really wonderful to spend time with you this morning, gain your insight and perspective. I think it's one of the best examples of success. As your point, there's still more of a mountain to climb, some more success to come, but it's been one of the better examples of early success, and it's given us for frankly giving us a real lens into how Broadridge has made and continues to make investments in changing financial services. So thank you so much for your time.
I appreciate it. It's a great space to be in. Very interesting stuff. Thanks,
Cool.
Kelly.
And thank you to everyone who joined us today. Please look for updates from us before year end on how our schedule of these expert conversations will continue into 2024. Thanks so much, everyone.